Welcome back, guys. I wanted to put out a second video today, an end of the day market wrap video. We had some movement in some sectors and stocks. Things are starting to look like we're going to get something that's going to happen here pretty soon. So I want to point it out so everyone's ready. Just like the video yesterday, I told you that, I was shorting this silver miner here, PAAS, and you can see that thing was down 11.5% today. And so when things are set up, it doesn't mean that when I'm telling you that a stock is set up to do something, it doesn't mean it's going to happen that day or even that week. It just means that has a high probability of happening sometime soon. And so that's, as a swing trader, you take a position on a setup and a trigger, and then you wait for that to play out. And if it doesn't play out, you stop out. But so far, this one's good. So, I'm up about 12% on this in just a couple days, and it's good. So, now we're letting gold sell off a little bit more, and we'll start looking at where to buy it back at. All right. So here's what I want to point out though: Qs. So Qs sold off today, and Qs was weak, and I kept saying we're having rotation out of tech. But I also mentioned that the S&P 500 can't hold up without tech. If tech's going to sell off and people are rotating out of tech, really what that means is the market's going to sell off. It doesn't mean that tech is going to sell off and the money's going to find its way into other stocks, the airlines, and they're going to have any impact on holding the market up. Tech holds the market up, and for the most part, that's it. I mean, tech could sell off, and maybe you could be strong in XLV and financials, and you might be able to go sideways. But if tech isn't rallying, the market can't rally. And so when you see rotation and you see people selling tech, it really means the market's not going to hold up. And that's what we got here in the SPY. So you can see here, let's point out tech here first. So here, what happened in the triple Qs? Well, we came right down to support. And it's right there at support, so that should hold. But again, the more times you tag support, and you can see we've tagged it quite a bit, this is where the buyers should step in. If the buyers don't step in, then and we break, you expect it to come in the form of a gap down. So that's all I want to point out. If you look at the hourly, we just closed right down to support. This is where the buyers, the bullish buyers should be stepping in. The ones that are following the charts, they should step in right here. And if they don't, if we get a gap down tomorrow, then that would be a break of this support line. So doesn't mean it's going to happen, and obviously we're still in trend, but we're right at support. So it's at a moment where it could break. Here's the daily of the S&P 500. If I go to the hourly, you can see that the SPY kept moving higher early in the day, and Qs was selling off. But then again, the SPY can't hold up without Qs because it makes up 25%, and 5 stocks pretty much dictate where this thing goes. But tech as a sector really dictates where the entire market goes. And so as Qs was selling off, SPY followed through to the downside as well. So SPY closed down, breaking a wedge pattern as well. So we'll see if there's any follow through. I think there will be. You can see here on the daily, we've got, this is a bearish engulfing and an outside day right here. So possible reversal candle in SPY. Need to see follow through or confirmation. And we also need to see Qs break. So here's the setup that I see playing out. If this SPY candle is going to be the market top, and this reversal candle is actually signaling a trend change, a reversal, then Qs needs to break its support line right here. So if Qs has a gap down and then SPY has follow through to the downside with a confirming candle, that should be enough information that you need to show that this is probably the end of this rally right here. The market can't hold up without Qs. So if Qs breaks its support that it's been in, really going back, I mean, you could extend this all the way back to, April, basically April, if this breaks and Qs breaks this trend line, then that should be the end of the rally for SPY as well. If Qs doesn't break and maybe tomorrow we get a big gap up or a big ramp up tomorrow and the buyers step in, then the market's not ready to roll over. Let's look at gold here. So gold sold off. I pointed that out yesterday that gold was looking weak, and that's one of the reasons why I took the short in the silver miner, because that's about as leveraged as you can get on the gold trade. When gold moves, silver typically moves even more, and the silver miners are a leveraged way of playing that movement in silver. So you can see here, if I point out, here's SLV. SLV fell, almost 13.5% today. The futures were down even more. Pretty impulsive move down. It came in the form with a gap down, and that's why I don't chase these moves. Anytime you see a parabolic move, you're going to expect to see some sort of washout move. So we probably head down a little lower. I think 21.40 and maybe 20.50, somewhere right in there. We might find some support for silver in the short term. And gold obviously is heading lower. I think gold's probably heading down to the 1792 area. They might step in a little early, but somewhere in that area, I think you'll find some support. Here's the dollar. The dollar didn't really catch a bid today as strongly as you would expect with gold selling off. So I'm not seeing, a rush to the dollar. I'm just seeing a rush out of gold. So something to watch. It's kind of interesting. And the other thing that I want to point out, here's Barrett Gold. I'll cover this real quick. Barrett Gold, obviously, here's your uptrend line, and you had a gap down and a sell-off. So impulsive, it's a sell signal. It basically just shows weakness. I'd expect this to continue lower. So I'm thinking probably down around this $20 is where we'll find some support. Possibly 22.30. There might be some support here. You can see that was the kind of the low right here and then the high. So maybe we get a reaction right around that 22.50 range. So we'll watch this. Another thing though I want to point out is the bonds. So we can look at BND. It's always important to look at bonds. And bonds sold off as well and came in the form of a gap down and selling off. So that's something to watch. If we're starting to get movement out of bonds, gold is selling off, bonds are selling off. What does that mean? What I saw the gold sell off as is the fact the market is not anticipating any more stimulus, because stocks sold off and gold sold off, and both of those have been rallying on increased stimulus, more and more money printing, more stimulus. And as I pointed out in the video just a couple days ago, that the bond market was giving us a warning because the bonds are not being bought by the Fed. The bonds are being bought by the market. So that's just something to keep track of. Now, is the market starting to sell bonds? Well, maybe they're starting to sell bonds. So we have to watch this. I don't know exactly what the bond market sell-off means. Technically, it's just a gap down and a sell-off. I don't trade the bond market for the most part. I just watch it to give me signals for what the rest of the markets might do. XLV, you had a sell signal right here. Not super impulsive, but it is a solid close. It was impulsive in the last few hours. So you can see here, your rising wedge and the breakdown. So maybe we see a gap up tomorrow, but it won't recover this wedge. That's what I'd look for. Any kind of move higher is probably a move to be sold or shorted unless they can recover this. If they gap it back above support and then it can move higher, then that's a false breakdown. Otherwise, if it gaps up and can't recover the support, watch for a clear rejection of this trend line. And if that happens, then that's bearish. That should continue to move lower. Even financials, they gapped higher and they opened higher, but they sold off into the close as well. So we'll have to watch this. Obviously, financials, looking at the daily, still in the uptrend. XLK broke too. So here's your daily close. Nice daily close breakdown. And you can see here's your upward trend line. We broke once, but it was a false breakdown. And then it recovered. So if this is really where the breakdown is going to take place, it's a really spectacular bull trap. The reason why is you put the bear trap in right here. This was your bear trap. When we broke down, closed below support, and then ramped up and recovered, that was very bullish at that moment in time because you had the bear trap, you recovered it, you ramped higher. So everything is bullish at this moment right here. And if it sucked in all the bulls, if we break down here, that is, was a pretty spectacular bull trap. It captured a lot of the bulls and could play out. So we'll watch this. If there's more selling, then this might be the end of the road. If there's not more selling and it recovers and is able to recover this breakdown here and continue to move higher, then there's nothing going on. But I'm just pointing out the potential for what might be coming down the road. And when you look at the daily chart on Apple, this is yes, it's a bullish chart because you have an upward price channel right here. You broke down, that was bearish, but then you recovered to the upside. But you can see anytime you're outside of our price channel, it basically is a low probability area. So anybody who was buying Apple, ramping up above this price channel, it was a low probability area. Sure enough, we're selling off. We're probably coming down to the bottom of the price channel tomorrow or the next day. And then we'll have to see a breakdown, obviously a break to the bottom, a breakdown of support through this price channel would be bearish, and that's going to set us up for big moves in the market to the downside. Microsoft broke support here. You can see if I go to the hourly, you can see this was support. We were below it. This is where it gapped up from right there, gapped up, and then when we came back down to it, we undercut it, but it still held. And then finally, you got the close below. So back down in this area. It really has no business being back down in this area. It bounced up, and now we're back down. So I suspect there's probably some more momentum to the downside coming. Amazon pretty much closed right at support. Here you go. Amazon there's the uptrend. And, it closed just a hair below, but basically right on support. I mean, my trend line might be off slightly. So we'll have to watch this. If we get a gap down, then that would be your bear trap or your bull trap in Amazon. And we'll watch for more price action to the downside. Google broke below support as well. Again, so Google's been chopping up and down, but we broke down. We're back down in this area. So again, we don't have any real business being back down here. Everything we broke down. The reason why is here in Google, this was your support, 1484.50 basically. And we broke down. So at that moment, it was bearish. You broke support. Everything looked bearish, but it wasn't impulsive, and it chopped around, and then it recovered and created a bear trap. It recovered. It ramped all the way up here to 1516. Everything looked bullish at that moment. Looked like it was going to continue higher, but now for some reason we're back down here again. So we just don't have any business being back down here. I think this is bearish. It's a way to. I'm reading this as bearish price action. And in general, the price action today was bearish in Qs, but we didn't break support. So again, I don't think they're going to break support during the market. I think it's going to come in the form of a big gap down, and they're going to trap. It's going to trap bulls. They're going to gap down, and then it'll start to move lower over time. Here's PayPal, just cover this one. So you can see we were walking up resistance right here. I haven't moved these lines. These have just been here. We were walking up resistance, rejected, sold straight down to support, and that's where we closed. Right there at my trend line. I didn't move these lines at all. It just closed right there at support. So we'll see what happens tomorrow. Adobe. Look at Adobe's price action. So obviously I thought this was a stop raid or a bull trap up here, so that's why I didn't close out my short. Sure enough, sold off, and everything's been bearish since, basically. Nice impulsive sell down. Now we had some support right here in this ascending trend line, so I marked that out, and I was watching to see if that could hold. They made it look like it was going to hold right here. You can see we undercut it, then it snapped back and held, started to rally, but into the close today, sold off and closed below that support. So bearish there. Adobe looks like it's going lower. So we're targeting, you know, about 40 or 410, I think, for the next move. And so we'll watch that. Netflix. I pointed this out as a bearish chart. Here's your uptrend line in Netflix going all the way back to the March lows. And, you know, this was your blow off top. Sure enough, you know, and that's the thing. When you do a blow off top or have some vertical move, usually when you start to head down, you're going to come down with some real force. And oftentimes that will be enough to break that support line that the stock had been trending in. So that's what happened in Netflix. We broke, then we back tested again, and that's all she wrote. We're rolling over now. So Netflix is looking weak, and it has broken its uptrend, starting to make, you know, lower prices. So Zoom, I pointed out that I had entered a short on this one. It was down 7.5% today. Yesterday, it broke its trend line right here, or actually this morning, it broke its upward trend line. So here's the upward trend line right there. You can see going all the way back to January. This thing's been a bubble stock basically, and I'd expect it to deflate probably just as fast. I don't think it'll give up all its gains. There's some value here, obviously, some intrinsic value, but I think that it's, you know, got way ahead of itself, and now we got to come down. So we broke. Here's the breakdown right here. Nice impulsive candle, a little kickback right there, starting to roll over. So I marked out some near-term support, 231.90 basically is what I found right here. After we got this reaction, this first reaction right here, that's when I marked it out. So we closed just below that. I think we had lower. And I've got this other trend line right, or this horizontal support at 180.05. I think that's the target, maybe the end destination of this thing. So that's going to be about 22% down from where we're at. So looking for that one to continue. Doesn't mean it's going to continue all tomorrow or all right at once. We could have kickback rallies. We could consolidate sideways before we break down. Sometimes you just have to wait. But really, it's all about, does price move up and then does it stop and consolidate, or does price continue down? I just don't want to see price moving back up above the support now. Any kickbacks to support right here would be areas you could add to a short position. DocuSign, obviously, nice clean support. Support was broken here, then it recovered. Now it's back down in the area. I think to me, a lot of these stocks look like really good bull traps. And I say that because you broke down, you had the bear trap. It was right there. Anybody who was bearish on the breakdown thought, okay, we got a good sell signal, everything looks good. But then all of a sudden it had recovered and started to run higher. Anybody who was short on this breakdown covered their short trades for the most part when we were ramped up in this area. So there's no shorts left. And then it rolls over. So to me, it looks like this move higher cleared out anybody who was short right here on this short move. Anybody who was bullish jumped back on thinking stocks never go down, and then you get the impulsive move down. So I'd look for this to continue. I mean, you look at the close here in DocuSign basically, and it closed at the lows of the day. So very weak close. You know, it would have gone lower if the bell didn't ring. All right, to round it all up, to sum it all up, the name of the game right now is this chart right here, Qs. Everything else to me looks pretty weak. And, you know, is the market selling off because we're not getting any more stimulus, or, you know, they're not going to pass anything? You know, well, maybe, and that's probably what's going to happen. But the charts, if we look at the charts tell me we closed right at support, and support, this is support, so it hasn't broken. So really the only chart that really needs to be watched is this chart. If you get a breakdown here, then and you gap down or get some sort of impulsive move lower, then that's probably all she wrote for this rally. So that's really what I'm going to be watching. And we could rally a little bit more. You know, obviously it could bounce off support and go higher. That's completely possible. Or it can gap down. So which way does it go? I don't know. Nobody really knows. But I know what I'm going to be doing if I see that impulsive break of this support line. So that's all I got, guys. And let me know what you guys think. Give me a thumbs up. What do you guys think? Is the market going to break down? Are we going to break down this week? or are we going to rally off this support? Let me know what you guys think. Talk to you later.